Before you place your next trade, watch this. What happens when slowing consumer demand collides with sticky inflation, safe haven flows, and markets waiting on Powell's final Jackson Hole speech? Well, let's break it down. Hi, I'm Francois du Plessis, your market analyst here at ATFX Africa. Let's kick things off by having a look at what is laying ahead for us this week. It was another big week for financial markets last week, with global equities ending higher despite conflicting US inflation data and plenty of twists along the way. The much anticipated Trump-Putin summit wrapped up late Friday with little concrete progress, and all eyes now turn to Washington, with Ukraine President Zelensky meeting Trump later today. Looking ahead, this week is stacked with risk events. Today is a relatively quiet economic calendar, but geopolitics keep markets moving during the later course of this day. Tomorrow, we will see the Kiwi PPI, Australian consumer sentiment, and Canadian CPI take center stage, along with Fed speech from Michael Bowman. On Wednesday, the People's Bank of China's loan prime rate and the Reserve Bank of New Zealand's rate decision will be released alongside UK CPI, plus speeches from Fed members Waller and Bosnick ahead of the latest FOMC minutes of meeting. On Thursday, we will see flash PMIs dominate across the globe, US jobless claims and Philly Fed data hit, and the Fed's Jackson Hole Symposium will kick off. And then on Friday, UK and Canadian retail sales are due, but the main spotlight falls on central bankers at Jackson Hole, with the Fed Chair Jerome Powell's speech likely to be the week's defining moment. So with plenty of data and central bank updates ahead, volatility is almost guaranteed. So let's zoom on today's focus markets. But before we do so, if you haven't done so yet, please remember to subscribe to our YouTube channel and like this video, as that really does help us to boost this content to other traders like you. Kicking things off with USD CHF, the pair edged lower towards the 0.805 mark as soft US data weighed on the greenback. July's retail sales rose just 0.5% month on month, slowing from June's stronger print, while consumer sentiment fell to its lowest level since May. To complicate matters even further, producer inflation jumped at its fastest pace since 2022, creating a mixed picture for the Fed. On the Swiss side, quarter two GDP slowed to 0.1% from 0.8% in quarter one as US tariffs pressured external demand. Despite this slowdown, the franc held firm, helped by safe haven demand, as markets kept a close eye on US, Russia, Ukraine developments. Technically, USD CHF is holding just above the 0.805 level. A clean break below here could expose the 0.803 round number, while resistance is seen back at 0.807. A break above could lead to a potential retest of 0.81 or even 0.815. The broader trend over the past year still favors the franc, but near-term action is likely to be choppy ahead of Jackson Hole.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Silver bounced back above $38 per ounce this morning as investors looked at Washington, where Trump meets with Zelensky, and the Jackson Hole later this week. The market is balancing geopolitical uncertainty with Fed expectations. Odds of a September rate cut remains high, however, though sticky inflation data has reduced the chance of an aggressive 50 basis point move. On the charts, silver found strong support near $37.80, climbing back into its $38 handle. Immediate resistance sits at $38.25. A break here could pave the way towards $38.70 or even that round $39 number. Failure to, however, hold that $37.80 level, however, opens downside risk towards $37.50 and potentially even $36.30. For now, the white metal remains range bound, but with momentum slightly tightening towards the bulls. The tech-heavy US 100 slipped 0.5% to trade near 23,780. The index is currently up more than 20% over the past year. Investors are weighing mixed signals, however. Optimism around September's expected Fed cut versus concerns from hotter producer inflation and ongoing geopolitical risk. Adding to the mix, major US retailers Walmart and Target among them are reporting earnings this week. These results could be critical in shaping expectations around consumer resilience under the weight of tariffs and higher borrowing costs. From a technical view, the index is consolidating below the 24,000 mark. Support lies near 23,700, while resistance sits just above the 24,000 level. A decisive break of either one of these two levels could define the near-term direction, with downside risk still in play if earnings disappoint. So what traders should keep an eye on tomorrow? Canadian CPI, UK inflation, and a wave of central bank commentary are all lined up midweek. And with Jackson Hole only days away, every data point could tip the balance on Fed expectations. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa to experience the difference for yourself. And then traders, until next time, stay sharp, stay focused, and trade smart.